Ira Epstein with your Spider ETF stock market wrap up for this Wednesday evening, January 7th, 2026. All right, my friends, a pretty wild day. Yesterday I went through a lot of the market explaining reasons that I thought a correction off of upper Bollinger Bands were going to set in. And basically that's starting to take place. So seeing the metals down a little bit, that didn't fall into that category, but the market had been trying to fill a gap in gold and it sort of didn't get there. NVDA still stayed up. As you can see, Tesla back down $1.55, and we have a lot of new data coming out. Now, today you did get, and I'm sure you saw it, the JOLTS report. And corporations are pulling back. I mean, the market went from what, a 7.6 million jobs offered to 7.1. That's not the best. Now we're going to be getting ourselves ready in the morning for what the Challenger Gray report should be coming out. And then we should be getting on Friday the U.S. jobs report. And on the jobs, the early talk is maybe in the 70,000 mark of new jobs, and unemployment to drop from 4.6 to 4.5. We'll see if that all comes in. In looking at the data, as I said, we'll get the Challenger Gray. That'll come out quite early. Then we get the U.S. October trade balance data at 7:30 a.m. The weekly jobless claims are coming out at 7:30. They're looking for them up 11,000 at 210,000. And we'll see what the continuing claims come in. I didn't see an estimate on that, but last week they were at 1.866 million. Then at 9 o'clock in the morning, we get the October wholesale inventory and sales data coming out. We get the natural gas storage report coming out at 9:30. And President Trump did one of his today flipping market things. He came out and he said that he's going to go to Congress and seek to create something. I don't know if there'll be a law or what he's going to be able to get done to stop corporate housing companies from buying homes and renting them out. It's a huge business in America. It makes up out of all the rental homes that are there, probably 3.5–4%. Most of the rentals are owned by small people, everyday John Does and Jane Does. And that is how that basically works. But for the corporate companies, you do recall that how many were bought during the COVID and all those crises that took place. I remember with my friends, we were going and I had a good friend who was buying homes in Phoenix and flipping them just instantly. And, he went from one or two, all of a sudden he had 15, 20 of them. So that goes on. But when you take these big companies, like Warren Buffett's got companies that did this, others, what the president seems to think is when they come in, that they hurt the, number one, the supply of homes and the affordability. I'm not convinced he's right on any of that. Not at all. You need a rental market too. And I don't know that if it's only 3.5–4% of all the rentals out there, is it really that they're controlling that? The U.S. defense contractors came under problems. The president now says he's tired of these big companies paying more than $5 million a year to their top people. He's tired of them giving out big dividends, and they should be putting more money into their own companies, delivering more weapons to the United States. Okay? So he's on a roll. What can I say? The U.S. today did grab control of 2 tankers. Now, one of them could be problematic in that the tanker, I think it was called the Minerva, decided to change its name, put on, out of nowhere, they put on Russian symbols on it. They flew the Russian flag. Russia said they told the U.S. not to go after the tanker and to protect the Russian citizens on it. And Trump instead had his forces go on and take control of it. I don't know if that'll be a problem or not. From everything I've heard, nobody was hurt nor killed. So we will see what goes on there. So as we step to the charts on the emerging markets, there's a big gap in this chart right down here. It gets filled between 56.24 to a high of 54.92. I'm wondering if the market doesn't want to go back there and fill it. I showed you yesterday that the EEM chart typically does fill charts. The swing line is still bullish, higher lows, higher highs. Still like what I'm seeing there. I see support starting to climb. The last swing line low was here. And if you look at it, it came in at 50, let's see, That was, I don't see where it's showing me the high and the low. Let me try this another way here. Now we'll get it. The low of this chart, that's what it is, was 54.71. All right. Well, here, let me give it the right one. My grammar is all screwed up. The high was 54.92, and the gap goes up to 55.91. So that is my target area for the market to fill the gap. You also came off and fell back into the Bollinger Band area. There's nothing bearish on the chart at this point, except I would like to see the gap filled. That's not bearish. It's also embedded. So I think on good breaks in the market tomorrow, if you get them, I think the market's going to get bought by the pros. So I'll be looking at that one very hard. In the gap, the market's trying to make a stance at the 18-day average of closes. You have a pattern of lower low, higher high. The market had a heck of a bounce as we came back this week. Lululemon had a big outside day down. That could be the end of this rally that it's had here. I wouldn't be surprised if it goes back to the 18-day average or lower and tries to work down a bit. FedEx over the upper Bollinger Band, that's this black dashed line, 2 days in a row. You only stay over those lines 5% of the time, and you always look to see does this chart generally follow suit, and it does. It often gets over a couple of days in a row and then rolls back into it. So that's what I think is going to go on. When I look at Netflix, as you saw, the board has formally asked shareholders not to accept the Paramount bid, and Netflix today was up 8 cents on that. It tried more of a rally. It got to 92.42, but by day's end, that was all trimmed to just an 8-cent rally. Uber up to the upper Bollinger Band, overbought. I think the pros are coming out up here, but on the next series of breaks, especially if you can get rid of this overbought condition, I think Uber becomes a very interesting play on the long side. Rivian came alive today. They tried to beat this up early in the day. They opened it at 1945, as you can see right here, dropped it to 2006, and then took the chart back up, as you can see. And now the question is, can it get any legs from here? I have my feeling that it isn't going to. The pattern is still one of a lower low and a higher high. That's why. I expected Joby to pull back after hitting the upper Bollinger Band, and it has now. You were 3 days in a row hitting it, you're pulling back. The first support level should be the 100-day average with the bigger support down here. It's not yet in a buy mode because of the pattern of a lower low, higher high. XLF, same as Joby, lower low, higher high, 3 days of hitting the upper Bollinger Band and pulling back. In XLI, so the industrial select sector, a huge key reversal in the market. So until this high is taken out, the market's making a trading top. It was overbought. It still is. It could be headed back to support at 157.08. It is, in my opinion, never a buy over a Bollinger Band. And energy tomorrow is going to be interesting. Can the market find support at 44.91 and not get under 44.49? That will be what the bulls try to do in the market. As I had told you, you were coming up here, and on the first challenge of a Bollinger Band in an overbought market, look on the left, that SSTO, you see it in red at 72.34. That's when you see the pros, I think, coming out of the marketplace. In the gold market, I think gold's a buy tomorrow. So I'm looking at the market that if it doesn't take out today's high, if it were to fall down to wherever the 18-day average is, that's going to be pretty close to filling this gap. I want to see what happens with it, but I will be talking to my clients first thing in the morning about that. In Google, I see the sideways action. I like this company. I think they're going to be a good sized winner in it, in the AI business, and we will see. It's not yet saying to do anything. It's still sideways trading. Microsoft got beaten up at the beginning of the year, got down to as low as 469.5. It's already up $10 from there. I don't know why they beat it up so much at the beginning. This is another one of these companies that, with all the products they have, I can't see them not being a winner in the AI business. BND, as the market turned on today and it started looking at the labor numbers, and that's it. The ADP number was not all that great. And the market is saying, well, the Fed has still got to protect the jobs. And is it war on? These markets got to bid. I think they also got to bid with some of the things the president said, and people ran for the hills. They dumped stocks. You know, you're scaring people when you make these statements. And our president has an interesting way of making those. I did an interview tonight in Australia, television, and I was talking that, you know, not all Americans are as gung-ho. I think a lot of Americans like the policies of the president, but some of them seem to come out in left field, and you got to wonder how much of it is talk, what's real, what isn't real. Do you ever meet the dates that are coming up? You know, the taco place, Trump always chickens out. So we will see how that plays. He isn't chickening right now, I'll tell you that. He's doing what he said he would do, and he's doing it big. In FXE, downtrend, but under the Bollinger Band. Time to be out of all shorts, in my opinion. So you put this together, you come up with a game plan, and I think your best plan is to consider what our products are. This is the biggest amount I offer in any year, 40% off. And it generally happens right at the beginning of the year. And my other specials at different holiday times are not as big as this. So futures, spider ETFs, 1 year ETFs, any way you want to go with them. Everything is being discounted. For $32, you see 90 days of what I do. Give it a try. I think you'll get hooked on it. Remember the different courses that I have. I have 3 courses, 40% off. All the courses come with my 1 month of research from me, the free charting software, the software you're seeing me use here, and then the lessons that are offered in the course. You don't have to take the course the day you buy it. You turn it on when you're ready to. And from there, we start everything going for you. In any case, I'm Ira Epstein. Just go up here to iraepstein.com or move your cursors to the top here. You'll see icons come up. Or on YouTube, there's an icon here. Give that a click. Either way you go, I'll see you in the other videos tonight. And of course, first thing in the morning. Take care.